Hello, good morning.
Good morning, sir.
Okay. Uh, this one document visible. Can you see this one?
Yes, sir.
Okay. After a long time, we have started with the container account. Just I will explain the container account and why we are preparing. Then we will go for a second example. I think we have completed example number one, isn't it? Yeah, we have done the example one, no?
Yes, sir.
Yeah, okay, right. Look at here. The container account, I think you didn't study the A level. That's why just I repeat again after long vacation, maybe 2 weeks, I didn't have lectures for you. Okay, container account. We know there are two type of the container. Container will be used for import and export purposes. That's why there are two type, returnable and the non-returnable container. The non-returnable container, we are not worried about that. When you purchase the item, the container belongs to you, you can enjoy, no need to return to seller. But returnable containers are the container to be returned by the customer to the seller. But here we are going to discuss the container. These are the container used for the import and export purposes. Okay, look at these costs are returnable container not taken into the consideration, consisting the goods or goods that are sold. Okay, returnable container. When we are doing the container accounts, there are two mainly four accounts to be prepared. Number one, container stock account, container suspense account, container customers account, container trading account. When you are preparing the container stock account, they are related to opening stock, closing stock, destroyed, purchase or scrap, or everything would be recorded debit and credit. I have given the notes. Number two, customers account. When you send the item or when you send the container to the customers, they have to pay. When they return it, we are going to reduce from their accounts. That's why debit and credited, where we have to record, we have studied. Third one, suspense account. When the containers, whatever the period we have given, not completed until the 31st March 2020 or 21 or whatever the accounting period, that will be treated as a closing stock. When they return, we have to pay their returnable amount, which be recorded in the reserves account. Okay, right. The trading account is prepared to recognize the profit or a loss from the container trading. Those are the four accounts. Those are the four ledger accounts to be prepared when the company dealing with the container transaction. Isn't it? Okay, no. Look at the what you call the our related ledger accounts. I have given when you purchase, what account debit, what account is credit, what is the value to be recorded. Container when they dispatch to the customers, when the container return, container repair, when there is a container scrap, destroyed, or all I have given as a guideline. You can go through. That is the easiest way to understand your yourself. Okay, right. I think this is the example we have done. Can you remember that, Laksita? Can you remember we have done the example number one, isn't it? Anyone? Ara, Infas, anyone?
Yes, sir.
Okay, right, very good. Here, when you are doing the container account, there are four prices. Four items or four prices to be considered. Number one, purchase price. The purchase price is the price given by the container company. We have to record as a purchase price that should be considered in the container stock account. Second one, invoice price. Invoice price is the price we are charging to customer when the container sent to them. The third one, return price. When they return our container without any damage, how much we are going to give. Say for example, I am saying example invoice price 100. I am saying I am charging you 100. I am giving 10 container. Therefore, your account will be carrying 1000. When you return it, I will give you 70. Therefore, when you return 100 container without any damage, 100 multiplied by 70, 700 will be recorded in your accounts. Okay, no, right. Look at here. Example number 2. ABC Limited sell oils in a drum which are charged at 10 rupees. Customer returning drums within a 1 month are credited A. What is the invoice price and the return price? Invoice price is 10, return price is 8. Okay, you have to pick up what are the related information or what are the needed information for the container account. Let's look at the here. Charge 10 rupees per container, that is invoice price. Return price is 8 rupees. Okay, the following information available from their books. Drums, look at here, drums means container. Returnable container as at 1/4/2015, 4,000 container. Returnable drums. Returnable container means we have given the date is not finished, still they having, say for example, I am giving 1 month. After sending 2 weeks, my accounting period come. 31st March 2000, I have come across. Therefore, I cannot ask them, I want to prepare the accounts, give me your container. No, they cannot give because we are giving 4 weeks. After sending their customers to the container to the customers, I come across my accounting period of 31st March 2021. Therefore, they are having 4,000. This is called closing stock, having by container, having by customers. Therefore, you have to be clear, it is not a retained container. Retained container is period is over, still they are having customers. But this one is not period over, they can have another 2 weeks. Got my idea? Inverse? Yes. Okay. Look at here. No response. Why you are silent? If you are yes or not, so you have to cooperate. All lecturers are complaining you are second semester. No one responds you. Around 120, 130 students are there. You are not response. Every lecturers, even the last faculty board also, they have complained. Your union student representative told that some lecturers are not taking the lectures or something. They are saying, okay, we are cutting the lectures, we will cover up the lectures, some are saying. But you are not responding. Even if you ask the question, they are theoretical question, they are asking the marketing management or economics or whatever, you are not response. Why is that? That is not a good. You don't want to open a video. Just if they answer, you have to respond. Yeah, just these are the things we are studying now. We are not going to find anything. Just I am also refer the textbooks. I am also not finding any accounts. I am also refer the textbooks. I teach you if there is a why I am asked a question. I want to ally with my class. You can connect and you can go somewhere. Okay, understood? Why? Yeah? Okay. Hello.
Okay, sir.
Why you are not cooperate with the lecturers? Cooperate with the lecturers. Otherwise, returnable terms as at 31st 2025. Otherwise, I can do that. Okay. What to do? Right. Drums physically in stock 2015. Drums purchased in 2015-16 5 rupees 30,000. Drums sent out in 2015 500. Drums customers returned by the customers 480. Drums scrapped in 2015-16 sold for 5,000. Drums sent out in March 2016 lying with the customers. All drums at 1/4/2015 valued at 2 rupees. All drums at 31st March 2000. Okay, alright. Please write up. We have to prepare the 4 ledgers. Right. Can you write down the ledgers? You have a notes books. You have a notebooks. This is the person. Okay, we will write down. Please draw our ledgers. There will be 3 columns, 1, 2, and also 3. 1, 2, 3 columns. Here also 3 columns, 1, 2, and 1. Container, we know, trading account. This is container customers account. Here also we have to have 3 columns. Container stocks account. We know quantity, rate, amount. Quantity, rate, amount. We have discussed those things in the earlier class. This is the second example. Quantity, rate, amount. Quantity, rate, amount. We have to record. Next one is the container suspense account. Quantity, rate, amount. Quantity, rate, amount. Okay. Look at the number 1. ABC Limited sells oil in a drums which are charged at 10 rupees. Therefore, 10 rupees is the invoice price. Customer returning their drums or container within 1 month are credited with 8 rupees. Therefore, that is return price. We know how to mark it somewhere else. This is the invoice price. I have marked 10 rupees. Return price is 8 rupees. The following information is available from the books of ABD Limited. Returnable drums as at 1/4/2015. This is returnable drums. Therefore, we have to write down in the customer's account 1/4/2015 brought forward of 4,000 container. 4,000 container. In the case of stock account, we have to record, we have to be careful, 1/4/2000 brought forward with the customers 4,000 to record. We have, if there is any returnable container with the customers, opening stock of the opening stock of the container stock account 4,000. Customers account also would be recorded as a debit side 4,000. Drums physically in stock 1/4/2015. 1/4/2015 again physically brought forward. This is in your stores. There are 8,000 containers. Altogether, closing stock on the last year with the customer 4,000, our store 8,000. Altogether 12,000 is the closing stock. This year, those are the 12,000 will be treated as a opening stock. Okay. Next one, drums purchased in 2015-16, 5 rupees, 30,000. We know when you buy the container, we know cash account is credit. What account is debit? Cash account is credit. What account is debit?
Customer stock account.
No, when you buy the container, cash account is credit. Stock account. Therefore, case account, here we have to write down as a purchase. Total container 30,000. Please write 30,000. They are given charge also 5, therefore total will be 150,000. Please write down. I am saying you have to write down. My whiteboard is not big one, therefore I am telling 30,000 multiplied by 5, 150,000. Okay, the double entry cash account is credit. We are not preparing the cash account. Cash account is credit 150 and container stock account is debit 150,000. Okay, now why? Next one, drum sent out in 2015-16 500. When you send the item, we have to record in the customer's account. Number one is container suspense account 500. I don't have a space. Please write down 500,000. When you send the item, we are charging 10 rupees. Therefore, this is 5,000. 5,000, 5 million container customer account debit, and also we have to record in the what account? Suspense account. I am writing here container customers account 500,000 debit, 10 rupees, 5 million, 5,000. When you send the item to customers, there will be 4 records we have discussed. Number one, container customers account debit, container suspense account is credit. Again, container suspense account debit, container what account is credit? Trading account. Therefore, I am writing here container trading account. We are not going to record here. We have to record by 500 multiplied by 2 rupees. That is the excess. Therefore, that will be 1 million debit and also 1 million rupees credit in the customer's trading account. I am writing here container suspense. Okay, are you comfortable? When you send the item to customers, there will be the 4 records: debit customers account, credit in the suspense account, debit suspense account, credit in the trading account. Are you okay?
Okay, sir.
Right. Next one, the customers return 2015-16 418. Therefore, when the customers return, we are not going to record anything. Therefore, we have to record only 2 records. We are not going to record 4 records. Here 2 records. Customers account is credit, container suspense account debit 480. We have to record in the returnable price is 8. Therefore, 3,840,000. 3,840,000 credit, 3,840,000 debit. When you return, we have to write down the number of container 480. Write down return price. Here container customers. You have to clearly write down. Clearly write. I am telling. Container customers account credit, container suspense account debit when the customers return the container or return the drums. I have recorded only 2. Next one, drums scrapped in 2015 and the 16 2000 container scrap. Where there is a scrap, we have discussed container trading account is debit. What account is credit?
Stock account.
Container trading account within bracket scrap. They have given 2000 scrap. What is the charge they are charging? What is the price?
2.5.
If you look at here, all drums at 1 2015 April 1st were valued at how much?
2.5 rupees.
2.5.
2 rupees.
2 rupees. 2 rupees. Therefore, 2 rupees. Opening date 2 rupees. 2 rupees. Therefore, this one 8,000. This one 16,000. This will be 4,000. Stock account is credit. Trading account is debit 4,000. Container stock account. Here I am writing scrap 4,000. Okay, right. Next one, they sold for 5,000 rupees. When they sold the item, we have a double entry. Case account is debit. What account is credit?
Trading
Trading
account.
account.
Trading and careful. I am writing here scrap sold for 5,000. You have to be careful. Where there is a scrap, container stock account is credit, container trading account debit. Where there is a sale of scrap, cash account is debit, container trading account is credit. Okay, finished off. Drum sent out in March 2016, aligning with a customer 10,000. Okay, look at here. Drums or a container sent to customers in March 2016, lying with a customer. Now I am asking, there are two types. Lying with a customer's returnable container are the closing stock, where the date, whatever the period we have given completed, that will be treated as a retained container. Whatever the container held by the customers without finishing the date will be treated as a what stock? Closing stock. Okay, right. Now look at the containers are there. Containers customers account is there. Therefore, when you come to the container customers account, I am writing here closing stock of 10,000. Look at here, 10,000 is the closing. Without, you can write down here if you want, lying with the customers. Lying with the customers, you can easily understand. Drum sent out in March 2016, lying with the customers 10,000. Okay. Next one, all drums at 1 for 2015 valued at 2 rupees. Therefore, we are following the 2 rupees. All drums at 31st March 2016 are to be valued at how much? 50% below the cost. The below the cost will be calculated on 31st. How many closing stock we have at that time? We cannot multiply by 2 rupees. That time we have to multiply by 2.5 because they are saying on 31st March go for a half of your purchasing price. Purchasing price 5, half of that 2.5, that will be applicable only 31st March 2020, but during the period you have to apply 2, opening date you have to apply 2. Amount due from the debtors as at 1 April 2015, 10,000. What is that? On the opening date, customers payable how many thousand? 10,000. Therefore, look at 1 for 2015, customers lying the customers 4,000 container, they have to pay 10,000. This would be recorded opening payable amount. Are you okay? Understood this 10,000 I have recorded?
Yes, sir.
Right. Next one. Amount received from the customers during the year 1.1 million. During the period you receive the cash from customers, when you receive the cash from the customers, double entry, cash account is what? Debit. What account is credit out of 4?
Customer account.
Right. Therefore, I am writing here cash account 110,000. Are you okay? No quantity, no rate. Are you okay?
Okay, sir.
Right. Those are the information they have given. Write up the transaction in the books of ABCD Limited. Are you okay? Right. Is it okay? Right. Now, we have to recognize, is there any retained container from that one? Therefore, first we have finished off this one. First one we will be finished off. Look at how I am going to finish off. Okay, we have to recognize whether is there any retained container. Look at here, the first column 448,000. We have no, we have 480,000, isn't it? Isn't it? How many container we have? $480 and 10 altogether $490. Isn't it?
Yes, sir.
Right. Right hand side, how many container? 500 plus 4. Therefore, here is the big amount. First, we have to complete 504,000. Here also 504,000. There is a gap of how many thousand? 14,000. This will be treated as what container?
Retainable
Retainable container. Therefore, look at here. Here 5 million. Then 10,000. Therefore, our total will be 5010,000. 5010,000. Already we have 384. Then 110. Therefore, balance will be closing stock of 10,000 container. Closing balance of how many thousand? How many thousand? Different 70,000 is okay. I have found 70 okay. 5010 minus 3840 minus 1100. 70, is this okay?
Sir, can you repeat again, sir, please?
Yeah, this one we have to find out the 500 total. We have put this 500, okay. We have found 14,000 is a returnable container. I have found 5 million plus 10,000, 501,000 is the grand total. I put here 5010. We have to find out the gap. Gap will be find out after deducting of 3840, 110. The gap will be 70,000. Is it okay?
Okay, sir.
Right. Now look at here. The customer's account brought forward. They have to return 10,000 closing stock. They have to pay to the container account how many thousand? 70. That is the information last line saying. This is what we have found container, retained container 14,000. If there is a retained container, we have to record how many records? How many
4
records?
records.
4 records. Right. Now follow. I want to record. I have recognized, I have found the container, retained container, number of quantity. I have found 14,000 in a red color. Now I want to record for a 4. What is the record for a container? Can you remember? If there is a retained container, what are the records to be carried out? What account is debit? What account is credit?
Suspense account.
Yeah.
Debit.
Suspense account. Debit.
Debit.
Okay.
Trading account.
Debit.
Credit.
Customer suspense account. What account is credit? Trading account. Okay. Right. I am writing here. Container, trading account, retain. How many container we have found? 14,000, 8 rupees. 14 multiplied by 8 is 112,000. Debit 112,000 would be credited. Container suspense. I am writing within bracket retain. Okay. I have completed half of that. Isn't it?
Yes, sir.
Again, debit container trading account, credit in there, what account?
Stock account.
Container trading account, I am writing within bracket. My total will be 14,000. I can apply to 28,000 credit, 28,000 debit. Here container retained by the customer, container stock account retained by the customers. I have completed 4 records for a retain. From the customer's account, I have found 14. No records for the rate, no records for the, what is that, amount. the records would be carried out to recognize the only retained container of 14,000. Yeah, okay. Yes. Right? That's all?
Okay, sir.
That's all. Is there anything record we missed? No. Is there anything? Is there anything missed? No.
No, sir. All are complete.
Right, okay. We have completed. We have finished our first one. I am moving the container account. Can you find out this figure? 4,000, 8,000, 30,000. Total will be how many thousand? Use the calculator. 42,000.
Yes, sir. 42,000.
42. Here also 42. Therefore, here we have to write down balance carried down will be how many thousand? 26. 26.
Yes, sir.
26 will be valued at 2 or 2.5.
2.5.
2.5 multiplied by 26, that will be 65. Are you okay? Right. Now we have to find out 150 plus 16 plus 8 altogether 174,000. Here 174,000. The gap will be transferred to container trading account as what?
Depreciation.
Yes, good. Find out. 174 minus 65 minus 28 minus 4. One 74 minus 65 minus 28 minus 4. How much?
77,000.
77,000 is the depreciation. Stock account is credit. What account is debit?
Trade account.
Trading account. Writing container stock account for your easy references. I put the bracket depreciation. Finished off? Yes. Container stock account I have completed. Container customers account I have completed. Now we have to move to where suspense account 505 million. Here also 505 million. Now we have to find out, look at here, how much is the gap? 480, 95, how much? How many thousand gap? 500 minus 480 minus 14. How much is one? Q how much? 6,000? Yeah, 6,000.
Yes.
Yeah? 6,000. I okay, answer okay.
Yes, correct.
Yeah? 500 minus 480 minus 14. 6,000, right or wrong?
Correct, sir.
Right, okay.
Right, sir.
Right, okay. Why here 6,000? When you look at here, they are saying 10,000. Why is that? Customer account saying 10,000, our record saying 6,000. They right or wrong? Right. Our record saying 6,000, customer account saying 10,000. Right or wrong? Right. You won't answer. Right, because I will tell the answer also. Why I want to spend the more time with you. Okay. This is closing stock 10,000. You won't have a doubt. 10,000. Here 6,000. The difference because of the opening stock of 4,000. Okay. Right. Here 5 million. Here you have to find out the gap. How much is this one? 5 million minus 1 million minus 3.84 minus 112,000. How much is that? Can you find out the answer, please?
48,000.
48. Is it correct? 48,000 correct? I don't know.
Correct, sir.
Okay. Okay, 5 million. They are also 5 million. 5 million, 5 million, 48,000. Okay, close down. I'm also going to carry it forward. Okay. Now look at here. We have to find out whether there is a profit or a loss during the year. Where? Profit or loss? Which side? Here? 1 million, I think. 117,000. 117,000. Find out. This will be profit transferred to P&L account. What is the answer? Yeah. What is the answer? Can you tell me what is the answer, please? What is the answer, please? What is the answer, please? Profit? 117,000 minus 4,000 minus 28,000 minus 77,000. That's all. Just you have to deduct from the calculator, using calculator. How many? Don't I have calculator?
1,008,000.
1,008,000. Okay, 1,008,000 is the amount earned by the container company as a profit throughout the year transaction of container to the customers. Okay, understood? Right?
Yes, sir.
Okay, this is also one of the time. For example, number one is little bit okay, but we have some technique here. You have to use the technique, find out the difference between the example number one, example number two. I have explained you the today also, remind you. Then I put this one after this class. I will put you some example. You can work on VLE. Okay, and there is example also. Just do it. If possible, we will do. That's a simple small one also you have. Please do the example number 3. I will order to you do the exercise on that container. We will start the next one in the investment account in the next class. Okay. Yes, I'm going to wind up now. We will do the next session in the next class.
Okay, sir. Thank you.
Thank you, sir. Thank you, sir.